a couple of updates that have maybe got under the radar in terms of crypto news because of all the Facebook hearings, but it relates to a couple of videos that I already created. One of those was a stream I gave a couple of days ago where I took a little trip around some of the major superpower countries to discuss who is likely to become the next world superpower if the US dollar suffers a demise at the end of this the currencies tend to have an average of 50 years until they get replaced by another dominating currency. I've been talking a lot about the US dollar and how their crypto policy could actually be the end of an era. But anyway, today I want to talk about Japan in particular. Japan has made another interesting move, which is worth reporting and didn't really get much coverage. Also want to cover a few of those economies. I noticed in the last video when I talked about all the dominating currencies, if you remember correctly, if you watch the video, the quick summary is that there are three forces that are going to dictate, I believe, whether a country has a shot of using cryptocurrency to become one of the superpower economies and the next dominating economy. First is their level of indebtedness. The reason for that is because the economies that are running super debts, with the exception of the US, which is running the most crazy level of indebtedness, but it is already the world's dominating currency. So therefore, they're slightly different because it's the incumbents that are looking to disrupt that matter. But it's their level of indebtedness that matters. The higher the debt, the deeper in debt, the more likely they are to have systemic risk in their financial system and act in a very extreme way during the next systemic risk or financial crisis event. Japan certainly qualifies in terms of their level of debt, because then they can implement the second thing, which is their ability to allow the banking system to go bust by replacing everybody's deposits so that the consumers don't lose their deposits with a digital currency created by the central bank. Japan was one of the very first to actually start working on J-coin, and they've been working for an awful long time in creating a cryptocurrency backed by the Japanese yen. That gives them the ability to allow the banking system to go bust during the next systemic risk event because of over-indebtedness and replace depositors' funds with a digital wallet created at the central bank and essentially replace debt-based money with debt-free money created at a central bank. The third policy is having a robust regulatory environment that encourages innovation, but also meets some of the global and international goals for meeting all the regulatory requirements to make it an economy that can be engaged globally in a regulated way. Now, Japan was one of the very first to put together a digital currency exchange license where the crypto businesses that want to engage in the exchange of digital currencies to traditional fiat currencies or even crypto to crypto would have to apply to their regulator, the FSA. The robustness of one of the main reasons why they were the first to adjust is because they were the country that hosted companies that had the most severe hacks that led to consumers losing their money in the cryptocurrency sector. Firstly, they have Mt. Gox, which is the infamous first major exchange to disappear with clients' money. And second was CoinCheck, which was in dollar value at the rates at the time of the hack, the largest loss for consumers as a result of a hack. So because of those set of circumstances, because they hosted the first major crypto exchange, then they've put together that robust regulatory environment in order to allow their industry to grow. They also have the highest level of merchant adoption for Bitcoin in the world. If you walk down the streets of Tokyo, you can see billboards, Bitcoin accepted here. If you go to the major companies, electronic stores, you can purchase with Bitcoin, and they all know how to use it. If you go to their equivalent of Amazon and Google, you tend to see that they are very crypto friendly. And also they have some of their largest banks like SBI have been involved in the crypto industry for a very long time. Now, remember, none of that am I passionate about. I believe in the power of owning your own money, spending your own money, and the power of a monetary policy that rewards the saver if the utility of Bitcoin grows over time. And those things are very important to me, but also at the same time, the way that a country adapts to the crypto industry, I believe, is going to determine its future. So Japan has now made another move. Also, I want to discuss one of the countries that I obviously missed out, which is of major importance, was Russia. Russia has also technology companies that are looking to get into crypto with Telegram, but they're focusing on encryption and privacy, which also makes it a very interesting play as opposed to America with Facebook's cryptocurrency and China with WeChat using them. Well, they don't have a cryptocurrency, but I'm sure they'll be getting in the space, and they already disrupted cash using WeChat Pay. But those were data collection machines, whereas Russia's, I guess, got another approach, which is because it hosts Telegram, and Telegram is privacy centric. We get to see how Telegram's cryptocurrency fares against some of the other offerings from major tech companies hosted in different countries. And also, Russia, I'm not too familiar with their debt situation, but I know that Russia has been exploring putting their cryptocurrency, launching their own cryptocurrency backed by the Russian ruble for a long time. And also the founder of Ethereum, allegedly, and there was pictures of him meeting with Putin to discuss putting Russia's currency on Ethereum. So I know that those have been in the conversations for an awful long time. Vitalik also being a Russian that moved to Canada. So anyway, those are some speculations, and I missed Russia, so I thought it was important to add it here. What is Japan doing now? So just before I cover the news with Japan, I think it's worth pointing out that there's going to be a new cat and mouse game now, which is the next battle in crypto. We kind of got through scaling. We haven't solved that fully yet, but scaling was the first major debate in infighting within the crypto sector. To give you a bit of history, originally the whole crypto sector was aligned around us versus the banks. And it was just such an unlikely, being able to succeed was really the very first thing. Then as Bitcoin started to succeed, it became us versus the banks. Then as banks started to get in the crypto industry, it became Bitcoin versus blockchain, where the banks tried to gain control of this technology by popularizing the blockchain and telling everyone the blockchain is the new technology, but forget about Bitcoin. That led to mass adoption of Bitcoin because Bitcoin was the only blockchain that could work. And I remember going around all the different financial institutions in the world. I did a tour at one point where I was just meeting all the major fund managers that are managing most of the money in the world, where an investment bank called Jefferies asked me to speak about crypto so they could figure out what's coming next to all of their major fund managers. And they all went back and bought Bitcoin because Bitcoin was the only thing, even though Blythe Masters, who worked for JP Morgan, who was the inventor of the credit default swap that blew up our economy during the last global financial crisis, she was telling everybody is not Bitcoin, it's blockchain technology. So I had to kind of present Bitcoin after Blythe Masters was presenting the anti-Bitcoin movement. Anyway, digression again. What was the point of that? I've forgotten where I was going now. Yes, so this is the movement that has been happening. Oh yes, and now it's now I've got my thoughts. Thank you. So the next move was Bitcoin scaling after that, where we had infighting amongst the community around the different ways to scale, which really was an argument essentially about whether you care more about scaling or decentralization. The core developers believed that if you implement certain scaling solutions, then it will ruin some of the properties of decentralization by making it very expensive for people to run a node, and node operators are the ones that verify all transactions. If you make it very expensive for those people, then there will be a few node operators and the ability for a government to attack those node operators in order to try and take down Bitcoin, versus the people that thought, well, that's less important, that's a less likely thing to happen. So therefore, we need to increase blocks and make it cheaper and faster to use Bitcoin so that more and more people can use it without it becoming too expensive. And that debate went on and on and on. The end result was that we got both, which is we got essentially an off-chain scaling solution, which is Lightning Network. And this becomes relevant now because it also had privacy enhancing features built into it as well. We didn't get the change, but we had the people that believed in the other philosophy work on their own coin. And then Bitcoin started to get on with development again, and the infighting stopped. But the next major, and probably the last major change that we'll see in Bitcoin before we get some kind of major mass adoption where it just becomes too difficult to make changes, is all around privacy versus, privacy and fungibility versus being, complete traceability that the pseudonymous network has right now. Now, this is the most relevant situation because we're about to engage in a game of cat and mouse with governments and regulators accepting that cryptocurrency is here and they can't stop it, that Bitcoin is a force that's unstoppable, as some of the Senatemen said during the hearing, that Bitcoin is unstoppable at this point and we have to figure out how to embrace it and no government can control it. Is now the largest supercomputer in the world, and the security and hash power behind it is going up and up and up and up. So the next battle is a cat and mouse between Bitcoin core developers implementing privacy features, privacy enhancing features, versus regulators, banks and governments, which in order to engage in the industry are going to have to try and track all the data. And remove some of those privacy enhancing features and create Bank 2.0 using a blockchain, essentially, is what they're going to want to do. And that's the next cat and mouse game. Traditionally, technologists will always outpace regulators. And so I think it's a battle that they will lose in the end. However, we will certainly have a two-tiered economy. And that's okay, because a two-tiered economy gives people the choice and freedom of being able to use Bitcoin the way it was designed, hardware wallet to hardware wallet, own your own money, spend your own money, and decentralized exchanging platforms, and having the ability to have privacy enhancing features and spend them very fast using Lightning networks, and fast and cheap. But also having the ability to own your own money, spend your own money, and use Bitcoin the way it was designed. But then when you want to intersect with the traditional fiat system, then you have to go through the clunky, horrible, traditional on-ramps and off-ramps, where you have to explain everything about yourself, your blood type, your name, and everything that you do, which is what I experienced when I recently made a purchase of my house using Bitcoin. It took me 9 months, a source of funds, source of wealth, KYC, proving that I wasn't a criminal, tracking the crypto back to the Genesis block and proving that it didn't go through any dark markets or anything in between the time that I owned it or I acquired it versus using it. And then once you go through that process, then you can spend it easier. as fiat if someone's not willing to accept Bitcoin or crypto. So those are the two-tiered economy, and this two-tiered economy of getting out of crypto into fiat and out of fiat and into crypto, there's going to be a lot of regulations and challenges around that. However, the processes are going to get better and faster as more and more people go into the space. But we end up with that two-tiered economy where you have self-sovereign cryptocurrency if you're willing to use it, and the features and technology will get better to allow people to use it the way it was designed, versus holding it as an exchange and the next generation of crypto banks and everyone that's going to create Bank 2.0 but using Bitcoin and integrating with traditional fiat and stable coins and everything that's going to come through. Both of those economies are going to boom. I believe they're both going to be major growth sectors. But there is certainly going to be a game of cat and mouse between the developers in creating privacy enhancing features into the protocol versus the regulators and the regulated institutions. And as compliance has become a business now, so there's companies lobbying just for compliance services. They're going to be making enhancements in order to allow it easier to go on and off ramps in compliance with many of the regulations that banks have to adhere to. And this really will be driven by the Financial Action Task Force. I created a video on the implications of the Financial Action Task Force. And that leads me to the topic that I wanted to discuss today after several tangents, which is Japan has announced that they've got permission from the Financial Action Task Force to create the equivalent of a SWIFT network for cryptocurrencies. So for those of you that are not too familiar with SWIFT, if you make an international payment, SWIFT is a messaging service that allows the banks to communicate with each other and on one side know who is sending the money and know who it's being sent to, with all the regulations and friction that comes from that, which is what stops you having the ability to own your own money, spend your own money, because if the bank or the SWIFT network or regulators or the counterparty bank or the clearing bank or the central bank and all of the parties involved in making an international transfer, if one of those don't like what you're doing with that money or disagree, then they can stop that, reverse it, and then you have to explain it. That's what creates all of the friction in the international markets. But that's the world that we live in today. We have decided as a society that we think it is okay to live in a world where we don't own our own money. And thank God Bitcoin has come and created a counterforce that regulates the regulator and gives an exit to those that decide that that choice is not right for them. But as a society, we have decided that it's okay that we don't own our money and somebody else can actually tell us how we can spend it, what we can do with it, and stop it if they don't like what we're doing with it. I believe that that is very harmful to society, and the cost of that, those policies are very damaging to society and end up in lots of technology companies, corrupt officials, and people in positions of power are going to be using that data in a way that doesn't enhance society. And this is the whole, the major debate of the next decade is kind of, if you want to put it in regulatory language, GDPR, which is privacy enhancing policies from Europe, versus anti-money laundering policies, which is privacy de-enhancing, if that's a word, policies in order to attack money launderers and those trying to put the proceeds of crime through the financial system. This is going to be the major battle. In terms of crypto, the new battle, as I said, cat and mouse game between privacy enhancing features versus privacy de-enhancing features as this becomes more and more of a thing. And the whole catalyst for this is obviously Facebook launching their own cryptocurrency, which is crazy, as I've said in previous videos, but let's not take that tangent, because Facebook can do know your customer and anti-money laundering better than anyone in the world, even though the congressmen were asking whether they can do it. Well, actually, Facebook knows more about more people, and you have to actually use Facebook and get a backdoor to it. Your FBI, your CIA, your NSA all have backdoors to it in order to try and find out more about people. So that's the major news. So Japan has made another really smart move, and really emphasizing my belief and thoughts that they are perfectly positioned to, in the next systemic risk event, be maybe one of the major superpower economies, and get the Japanese yen as a more dominating currency. But this time it will obviously be different because everybody has the exit opportunity, and we have the first global digital currency called Bitcoin, where you can earn your own money, spend your own money. It's a fixed money supply, which creates a scarcity, which makes it independent of politics, and it is not trying to fulfill any one country's agenda. It is, in fact, internet, the internet of money, and money for the internet. Which doesn't necessarily have employment goals, inflation goals, or any of those goals. It's just simply regulated by mass and code, exists and is, which can then compete with what I believe at the moment is gold and dollar as the world reserve and treasuries as the world reserve assets that central banks hold. And I think Japanese yen, if they make the right moves, which they seem to be doing, they could end up being more important. So remember, one of the really big ways that US gets control of the world data is that SWIFT is a US dominant company, and obviously the governments have a backdoor to all that data. And SWIFT is used by banks all around the world so that US can have data on all the international payments. So Japan is making a smart political move by creating the equivalent of a SWIFT network for cryptocurrencies, so that when exchanges have to adhere to the Financial Action Task Force regulations, they'll have to use a network like this one that might be created in Japan, that's endorsed by the Japan finance minister, in order to ensure that they know who is on both sides of the transaction, the sender and the recipient, and what it's being used for. And if all those cryptocurrency transactions can clear through Japan's equivalent of SWIFT, then they could use that in order to replicate some of the success that the US has in gaining all the data. So Japan is making several moves, regulating the cryptocurrency exchange industry, already done, creating a digital version of their currency, J-Coin, already done from my understanding, getting the economy into major debt, so they have to make an extreme move and allow their banking sector to go bust during a less systemic risk event, already done. Japan has a big history of running a social welfare state and going deeper into debt. And so for me, that positions it as the country. And then they're making further moves, which is trying to create the SWIFT network of cryptocurrencies, as well as enhancing adoption and making Bitcoin almost legal tender within their economy. So they're really making a bet on cryptocurrency, which makes sense as Japan has traditionally led technological advancements, and it's an interesting set of events that might come next. So that's my topic for today. If you like this topic, then please do share this. I'd like more and more people to be prepared for what comes next with the financial crisis. Let me know what topics you'd like to see. I'll endeavor to cover them in future broadcasts. Follow me on Twitter if you'd like to see these live streams each and every day, or whenever I get the chance to go live around a very busy schedule. Also, if you're on YouTube, please do subscribe to my YouTube channel, Simon Dixon, because then if you don't catch me on Twitter when I do go live, it will send you an email if you hit the bell button next to that subscribe button. And then YouTube will send you an email every time I go live. Or I've created I've actually revived an old Facebook page called Simon Dixon. I used it years and years ago, maybe 7 or I think maybe 9 years ago I created it. when I was really doing a lot of content on banking reform before Bitcoin was created. And I think it's got some, so I've revived that. So please do like that on Facebook. And when I go live, I'll try and go across all these different networks. But I'd love as many people to see this. So please do retweet, please subscribe, please like, please share, please comment. Let me know what you'd like to see next. And over and out, enjoy your weekend, and see you at the next news event.